I hear people concerned. I see some concerns about why is UTHX mintable? And you've all been trained for so long here that having a token which is mintable is a red flag, or up on DEX tools, a yellow flag. And that's true for a lot of projects, but it really depends on the nature of the project. And I'm going to explain to you why it is that you should be just bubbling over about the second mint date. So without further ado, let me share my screen here and we'll start up a little slideshow. And this is going to be really fantastic discussion. Generally, when we hear that a token is mintable, you're thinking about things like a meme coin and maybe a rug pull, where something behind the scenes, some reason why this token is mintable when other tokens generally are not mintable. They mint the full amount. And if a meme coin is mintable, that's understandable to be concerned because there's nothing behind the project. It's basically, meme coins are basically Ponzi schemes, in my opinion. It really depends on other people buying it at a higher price. There's no real reason to own the token other than that. And if it's mintable, that means that people behind the project can, at any point, just mint more, sell them into the market. That's why the mintability has gotten a black eye. But if you really think about the godfather of all tokens here, the godfather of all coins, Bitcoin, Satoshi, absolute genius. And he didn't pre-mint 21 million coins and then start to distribute them. The way that Bitcoin was structured is a maximum supply of 21 million and rewards that get produced, i.e. minted, every 10 minutes. I want to explain to you why we made the decision to make UTHX mintable. And I thought that the best way to do that was in relation to Bitcoin and a discussion about Bitcoin standard, a discussion about money, and a discussion about coins in general and tokens. I'm going to start off by discussing what the features of money are, because this is really important to understanding Bitcoin. And you can tell I'm a huge fan of Bitcoin. I'm a huge fan of Satoshi. This is a monumental breakthrough for human civilization. And it's one that I was working on before, or concurrently, I would say, with him, but I was working on it from a different angle. And what I produced has generated a multi-billion-dollar economy, tens of billions of dollars that have flowed through a centralized, let's say, in-world currency raise in our classic system. What Satoshi did, which was so brilliant, was figuring out how to decentralize it and focusing on one particular feature of money. So let me give you an overview of the three for people that aren't familiar with economics and money and how this all works. Money really has three inherent attributes which combined give it the force of true value that we consider to be money. So one is store of value. And what store of value simply means is if I do work and I can't immediately get reciprocity for my work, that I need a way to be able to store the value of that work so I can exchange it later. If I'm a plumber, I've spent an hour fixing pipes, then ideally 20 years later, if I've stored that value, I can have somebody come give me 1 hour of pipe fixing and it's even Steven. Things that are good at storing value are things which can't just be arbitrarily increased. You can't just pull them out of the ground. Gold is generally considered a store of value because it's hard to get more gold. But of course, you can get more gold. Gold is ultimately mintable. Bitcoin, on the other hand, is we'll get to Bitcoin presently, but as stores of value go, things like chicken or fish, those may not be a great store of value. They're going to deteriorate over time. Something like gold won't deteriorate over time. The second feature that I want to talk about, let's say, is unit of account. This is one which is generally discounted a lot, but a unit of account means I can put on my books and records very easily a unit. So when I'm keeping accounting, I can say I got 3 ounces of gold. It cost me 2 ounces of gold. I netted a profit of 1 ounce of gold. That's difficult to do, again, something like a chicken, where you say, I got a big chicken. I got a little chicken, a scrawny chicken. I got a dead chicken, right? It's not great as a unit of account. They're not all equal. They're not easily entered into your balance sheet. Dollars are a really convenient unit of account. You just $1 in, 90 cents out, right? And then medium of exchange. And this is a major feature of money. And this is where every other crypto really falls. What medium of exchange means, just generally speaking, I can give my store of value. I can easily send it to somebody. They can easily receive it. And there isn't a real impediment to doing that. The less of an impediment, the better of a medium of exchange. If you're talking about seashells, those are easy maybe to transact locally when that was part of the economy, but you're not shipping seashells around the world. They are not a good medium of exchange. Again, a chicken, not a great medium of exchange. It's certainly not going to last long enough to operate that way. Dollars have become a medium of exchange where they can be stored as digitally in a bank and transacted, but this is a slow process. It requires intermediaries. The ideal medium of exchange has no intermediaries and is just seamless, instant transaction with low friction, low cost. Okay, so all combined, the ideal money would have these three attributes that are all combined at the highest possible level, at the best possible level. So when it comes to store of value, it's my opinion that Bitcoin is the best store of value that's ever been conceived of by and discovered by mankind. It has a maximum fixed supply of 21 million tokens or 21 million coins that will never be more than 21 million. It's just not possible based on the computing algorithms. And therefore, it will store value. The supply can't be expanded. There is an intrinsic problem with Bitcoin. I won't get into it now, but that it will, and I believe, continue to go up in value forever. As a store of value, it actually has a little bit of an opposite problem that dollars do, which is instead of going down, it will increase in value forever. But that's a good problem to have. It certainly doesn't become an issue for a very long time. And why is Bitcoin such a great store of value? Bitcoin derives its value from the computer network hash rate. And so what that basically means is the more computers that are joining the network, the more powerful the network. And because Bitcoin has the first mover advantage, it's brilliant in its encryption algorithms and the way that this is all done, Bitcoin is the king coin. And we can see how Bitcoin achieved that status by looking at these four elements. The first element, Bitcoin mints a new set of Bitcoin every 10 minutes. So we go back to the original premise here, which is that minting, that being mintable is bad, but it's not true. Bitcoin mints every 10 minutes, give or take, but on average, every 10 minutes, a new block is worked out and new Bitcoin enter the market. Added supply rewards computing power. So by rewarding computing power with newly minted Bitcoin, it incentivizes more computers to join. And as more computers join, the network becomes stronger, it becomes insurmountable, it has become insurmountable. And that network growth was designed by Satoshi so that every new block, every new issuance of Bitcoin adds more value to the network than the cost of those newly minted Bitcoin. In other words, if Bitcoin is worth 60,000, 70,000 a piece, and you're adding 3.25 Bitcoin, every 10 minutes, the network becomes stronger such that the network adds more than $250,000, $300,000 worth of value to the network. By adding computing power, increasing hash rate, it's basically spending these new Bitcoin, minting new Bitcoin to increase the ultimate value of the network. So understanding how Bitcoin obtained its leading king position as store of value, let's look over at unit of account. Bitcoin is an okay unit of account. There's 21 million of them. You can put them on a ledger, but there's some unit bias here, which is to say, it's pretty hard to say I got one Bitcoin in and it cost half a Bitcoin because one Bitcoin is what, $65,000. So really you're saying I got 0.00001 Bitcoin and it cost me 0.000005 Bitcoin. That's not a great unit of account. That is pretty messy unless you start going down to Satoshis like sats individually. With UTHX, we looked to overcome this problem by having a total maximum supply of 3 billion UTHX. That helps us with unit bias, when there are 3 billion users of our network, which I anticipate happening. I actually anticipate there will be more, but let's just say, for the sake of argument, 3 billion is a pretty decent sized network. There will be essentially one UTHX per user, and you can have a unit of account there where you're dealing in fractional UTHX, and people can easily deal with that on their ledgers, on their balance sheet. We looked to compete on unit of account with Bitcoin, but it's really on medium of exchange where I want to focus this discussion, because as a medium of exchange, Bitcoin has proven not to be very good. It is expensive, it's slow, you've got layer twos, you've got wrapped Bitcoin, really all kinds of machinations to try to get people to use Bitcoin in daily transactions, and it just doesn't really happen. Bitcoin is great if I want to lock away wealth and I want to transfer it rarely, but it's not great for buying a cup of coffee. It's not great for paying a bill at a restaurant. And to be fair, neither is anything else. No other crypto has come out, has been able to penetrate the market as a medium of exchange. And there is a reason why. And that reason basically is because they're trying to break into an existing economy where existing paradigms have already been set. And those existing paradigms include credit cards, bank transfers, digital ability to Venmo money, and everybody is familiar with these economies already. What is required really to become this medium of exchange is to be able to dominate an economy inherently. I'm going to get back to that point as I discuss how UTHX derives its value. So Bitcoin deriving its value by increasing the computer hash rate, it has to attract computers to the network. In order to be a medium of exchange, you need, instead of computers, you need people, and you need people transacting. And the more people you add to the network, if there's just 2 of us, we're passing UTHX back and forth to each other. If there's 3 of us, we can pass UTHX exponentially more. 4 is exponentially more. And as you get to millions and billions, the transactions become this complete web, which is a distributed network on a social level, which we're calling a social hash rate. So how do we grow the social hash rate? How do we activate this medium of exchange so that UTHX takes that pillar of what it means to be money? We've copied a lot of what Bitcoin did, of course, but put it into a new paradigm, which is social hash rate. Firstly, we mint new UTHX every month. We're not doing it every 10 minutes because we're not attracting computers. We're minting new UTHX every month. We can intelligently use this added supply to market to and reward users for joining the network. And when I get to the tokenomics, you'll see how that really works. We're loading up wallets that are specifically designed such that the spend of the new UTHX increases the social hash rate more than the cost, and that drives up the value of UTHX every month as the social hash rate grows exponentially. And this rewarding users incentivizes people to join the network, and as the network grows, it adds more value than the cost. So the concept ultimately is, we're not initially trying to get people to spend UTHX in the real world as a substitute for dollars, but we are building the metaverse, the ultimately interconnected Utherverse Xeon and Xeon sovereigns that will interconnect billions of people under this social hash rate concept. And this new economy all runs on UTHX, which makes UTHX, of course, the medium of exchange within the metaverse. And that allows once everybody's accepting UTHX, once everybody has a wallet that has UTHX, of course, then it extends out to the real economy, and we become ultimately the medium of exchange for the underlying store of value, which is Bitcoin. And as a unit of account, we're superior also to Bitcoin. So given that Bitcoin's current market cap is $1.35 trillion, ultimately the question is, what market cap do you give to these other critical features of money combined, the medium of exchange and unit of account? I leave that up to you. My argument is those are each worth about $1.35 trillion right now. I'm excited to be a holder of UTHX, that's for sure. And I'm really excited that our second mint is coming up, and you're going to see it in action. So let's look at what the second mint looks like. And this is where I'll leave my little lecture and we can go to exciting events. In purple here, you see what we minted at the token generation event. And in blue, you see the second mint, which is coming up on the 28th. We should be doing the second mint. Initially, there were a lot of rewards that went out to pre-sale owners, to pre-sale buyers. You can see that the number of minted tokens in the second mint for pre-sale is going to be significantly less than what it was in the initial token generation mint. Funding rounds. This is designed to add firepower to the wallets for growing the software side of things. So to the extent that we could do over-the-counter transactions, big investors come in, they can participate from the funding round wallet. I should point out that most of the funding round tokens are unspent. Those are going to be locked. Ultimately, they're not circulating the economy. The package sales, this was a one-time mint for people that had purchased VIP and upgrade packages. So there's no second mint for package sales. Those are already all stored in a wallet for later distribution. There was no marketing budget in the initial token generation event. There's a marketing budget now in terms of token, and that marketing budget, if you've got advertising space, if you want to promote the platform, if you want to promote the token, and you are looking to do that in exchange for UTHX, which I think is a great investment for you, there will be a budget for marketing starting with this second mint. Strategic partners, similarly, these are projects that come in that want to bring in 40,000 people from their project. We're reloading these wallets so that we can incentivize big projects to come in. And we're, of course, talking to several of them. If you've got a big project, they want to do some UTHX, that's where that can happen. Advisors, you can see, it's pretty much almost the same as the first mint. And again, this is for big investment banks and similar. The advisor tokens have not largely been spent yet either. As the wallets start to get full, we may reduce the mint numbers or we'll just lock them away for future. We have a plan for a 6-year mint cycle, but it's probably going to end up being pushed out to 20 years or 25 years because the value of UTHX has gone up so much. We're not talking anymore about needing at multiple dollars per token. These budgets are actually quite huge. The liquidity wallet is doing fine. There's no mint of liquidity. The staking wallet, of course, staking is coming up. We'll talk about that in a little bit. So our first staking allocation to the staking wallet is coming out, and that incentivizes people, again, to join the network and to stick with the network and to stake. The team allocation, this one I think is very exciting because most projects will allocate to a team and then distribute the tokens to a team. What we've done here is we've allocated to a team as an incentive plan, and this allows me, most of the team tokens are not allocated, and this may come as a surprise, but what the objective of the team allocation is to incentivize us hiring the top talent on an ongoing basis to maximize the software development, to maximize token development. And when we move to our own blockchain, that kind of development. So the team allocation here almost acts as an incentive program where we can say as a signing bonus, you can get a certain number of UTHX or options on a certain number of UTHX that can be picked up after a year. Generally, these vest over 4 years with an 18-month unlock schedule. Community rewards, of course, the most exciting, where we're finally starting to mint because we're going to hear about play to earn, which is coming down the pipeline here in, 2 days? Foundation and Treasury, of course, for general corporate. And so here you see this second mint will be just under 11 million tokens. The first one, of course, was 21 million, my little homage to Bitcoin. And then the totals here, where the growth from month to month in the total supply. I will make this deck available for people, and this entire segment, I'm going to try to cut it, turn it into a video for future reference.